Hi friends, very recently some of you left a comment on my channel saying that Rahul, can you speak about stocks under 100 rupees? So in this video, I'll present to you 3 stocks that are trading below 100 rupees right now. Can these stocks become a 1000 rupees sort of a stock? I do not know. When will it happen? Whether will it happen or not? But I'll give you a lot of information about these 3 quality stocks in this video. People who do not know me, my name is Rahul Jain and I'm a full-time investor. With that, let's get this video started. Let's go to stock number 1, which is Ujjivan Small Finance Bank. If you see my screen, you will very quickly notice in the last 1 year, the stock has hardly moved. It has given 1.83% returns. But more importantly, back in January, the stock was trading at around 60 rupees level. The stock has come down to 43 rupees level. This is almost 28% of fall within 7 to 8 months. Immediate question you might have is that, Rahul, when everybody is talking about 100% profits, why are you talking about a stock that has fallen by around 30%? Well, exactly that is my point, that the stock has fallen by 30%. And one of the strategy that I follow is try to pick those stocks where the market is very, very fearful. I'm not recommending that you go and pick this stock, but I'll give you some analysis that will help you make some good decisions. So why the stock has crashed and what are the future prospects of this stock? Allow me 4 to 5 minutes of commentary and you are going to learn a lot about this stock. See, the first critical point you will see on my screen is that ace investor Dolly Khanna has bought this stock in the month of June. You can see here 1.07%. Now again, I'm not trying to convey to you that go and buy a stock that a pro investor has bought. My point is very simple, that these people are making money because they are picking stocks when everybody is fearful, right? Let me now present to you why the stock is down. So 3 reasons for it, why the stock has fallen. Reason number 1 is on 18th of May, you might have heard this in the news that Ujjivan Small Finance Bank CEO has taken early retirement and therefore there is a change in the management. And typically what happens is when the management leadership positions are not stable, then market gets fearful and they book their profits, exit the stock, right? But very recently, Sanjeev Nautiyal has been appointed as the CEO of this company. Sanjeev has served State Bank of India in the capacity of Deputy Managing Director. So he comes with a very, very strong credentials. Second hypercritical point is that Ujjivan Small Finance Bank and Ujjivan Financial Services Limited has been undergoing a merger process in the last 2 years. And we know what happens when banks merge. There are a lot of merger pains that gets induced. For example, we have seen that in the HDFC Bank as well. Stock hardly moved for a few quarters when the merger was going on. In fact, it was down heavily. Same thing may play out here in terms of what is likely to happen post merger, and that might have created some fear in the market. But as of July, the merger is now complete and the company is now already merged. One positive side effect of this merger is that the book value of this stock has gone up to 29.07 rupees per share as of March 2024. And if you go to screener, you are going to see slightly incorrect data. It is likely to be 28.7 rupees here, which is incorrect. As per what the bank is stating, it is around 29.06 rupees per share as of March 2024. Now, the third key reason of the stock fall was that the company guided a loan book growth of around 20% for FY 2025 and market did not like it. Why did market not like it? Because in FY 24, the previous year, the loan book of this company grew by around 37%. And all of a sudden, if the management start to say that we are not going to grow at 37%, we are going to grow at 20%, what the investors will do? They will simply go and book the profits. And this is another reason in my view that the fear has been induced. Now, the reason I am not very fearful about this particular stock right now is because I read through their management commentary, and what the management was saying is that in FY 25, our loan book growth is likely to be between 20% to 25% for FY 2025. And also what management is saying is that later in the year a firmer number will be given on the exact growth. So this 20% is likely to be on the lower side of the spectrum. Markets have baked in 20% growth, and if all of a sudden the company produces results which is 25% or 24% or 26%, then market will be pleasantly surprised, and this is where the stock prices go up. Now, will the company deliver 25% or 20%? We don't know yet. And this is where we take our calculated bets. Now, this sort of analysis is a very, very timely analysis, and I shared such analysis on my YouTube member community. And if you want to improve your investing style and want to get timely updates about mutual funds, stocks, and various other assets, you can consider subscribing to my YouTube member community. Try it for 1 month, and if it helps you, continue to be a subscriber. And also, if you're liking this analysis, hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. Moving on to another hypercritical point about this particular stock. If you see the P&L account of this stock, you will very quickly note that the company's revenue is all-time high. The company's profitability is also at all-time high. If I also speak about some of the KPIs that really matter, their net interest margin, NIMS, is at 9.1%, which is very, very healthy in my view. ROA, return on asset, important KPI for banks and NBFCs, at 3.5%, which is also reasonably good. And if you look at the gross loan book here, it is around 30,000 crore. Now let me give you another hypercritical point about their loan book. See, out of this 30,000 crore loan book, around 20,000 crore is micro lending. What is micro lending? These are the small loans that the bank gives out to people that are underserved. They are not served by mainstream banks such as ICICI Bank, HDFC Bank, SBI Bank. So the bank is capturing that micro lending market, and 20,000 crore of their loan book out of 30,000 crore is coming from micro lending. Now there is a huge opportunity in India when it comes to micro lending sector. But there is one big risk that Ujjivan Financial Bank shares come with, which is that their secured lending. If you look at the 30% ratio here, that 30% of their loan book is secured book, remaining 70% is unsecured lending. And lately RBI has been very, very strict about unsecured lending, and there may be some regulation risk here for this particular bank. And that is why precisely Ujjivan Finance Bank is launching secured product offerings such as two-wheeler loan, gold loan, which is backed by the gold as a collateral, and so on. Now, what are the focus areas for 24-25 for this bank? Top priority of this bank is to have balanced mix of secured and unsecured lending. And in the future, this 30-70 ratio is likely to change. Point number 2, the bank is now targeting high yield product contribution products such as two-wheeler finance, micro mortgages, and so on. Lastly, very quickly about valuation of this company, we shouldn't be really comparing the PE and PB ratio of this company with likes of HDFC Bank and ICICI Bank. In my view, banks such as Karur Vysya Bank might be the similar sort of a scale. So if I look at the PE 9.91, while the PE of Ujjivan Small Finance Bank is 6.67. If I look at the PB multiple of Karur Vysya Bank, it is 1.97, and Ujjivan Finance Bank is at around 1.92. So I've given you a lot of details about Ujjivan Small Finance Bank. Let me know in the comments what do you think about the future prospect of this particular stock while I move to stock number 2. The second stock that I want to cover in this video is a company called IRB Infrastructure Developers Limited. Have a look at my screen and you will see the stock used to trade at around 25 rupees level 1 year ago, and it's now gone to around 67 rupees. This is around 164% return. So the stock has already given a massive rally, but there are two critical tailwinds for this particular stock that I want to discuss. Before I do that, you need to really know what really takes the stock prices up for this particular stock and what really drives the stock prices down. So have a look at my screen and you will see that recently there has been a multiple block deals happening in this particular stock. Please go and do Google about block deals. These are important concepts that you must know. But coming back, you see my screen on 30th of May, the stock sink by around 13% because of a block deal. Again, in the month of June, stock dipped by around 9% because of block deal. So it's a highly volatile stock, and you really need to be okay with such volatility if you ever want to invest in stocks like IRB Infrastructure. What drives the stock prices up? Simple, that toll revenue collection. So every month the company publishes how much of toll that they have collected. Again, I'll speak about the business model of this company in a minute, but you see recently their toll collection increased by 35% in the month of June, and that drove the prices up by around 2%. Okay, Rahul, all of this fine. Please tell us the business model of this company. So very quickly, IRB Infrastructure builds roads and highways, right? And it holds 38% market share of TOT projects. I'll speak about TOT projects in a very, very simple language as well. But more importantly, 10% of market share of pan-India toll revenue is what this company holds. So if you are ever traveling and paying 100 rupees of toll, please know that 10 rupees of that is going into IRB's pocket. Now, what are the two critical tailwinds for this particular stock? Point number 1 is the order book. The company is sitting at an order book of 35,000 crore rupees. And just to put this in context here, the yearly revenue the company did in the fiscal year 24 was around 7,000 crore. So this is a very, very good order book. Out of this 35,000 crore, around 8,000 crore is what they are going to execute in the next 2 years. Now comes even the bigger tailwind for this particular stock, which is that if you read the second line here, government has set a target of completing 200k kilometers of national highway by 2030, out of which 50% is done, 50% is yet to be done. And the construction of the remaining 100,000 kilometers is likely to need around 600 billion US dollars in the next 7 years. Now, will government have such a huge money to fund it? Of course not. And this is where IRB estimates that around 320 billion US dollars of gap is likely to be there in the funding. And this is where the business model of IRB comes into picture. Let me speak about why this is so important parameter for IRB stock. See, IRB operates in 4 business verticals, as you can see on my screen. But you really need to understand these 4 business models because it will help you massively anytime you want to analyze the construction sector, right? So the model number 1 is EPC, which is engineering, procurement and construction. Let's say I'm the government and I say that I want to build a highway of 100 kilometers and I'm inviting bids from the supplier. So let's say IRB comes and says that I will go ahead and build this 100 kilometers highway for you for 50 crore rupees. And this is my bid. And if they win this bid, government is likely to pay 50 crores to IRB, and IRB will have to completely do the engineering of the road, which is the design. They will have to procure the material, and then they will have to transfer this asset back to the government. So this is the EPC model. This is a traditional model. But in this model, the biggest problem is that government will have to spend 50 crore rupees, and government does not have unlimited money. Therefore, the second model came into picture, which is BOT model, which is build, operate and transfer. And in this model, what typically happens is the government will say that we are giving this tender out on BOT model, simply meaning that, hey IRB, you come here, you build this road for us, we are not going to pay anything to you, or we'll pay a little bit of money depending on how the agreement is written, but you come and build this particular road, then you operate this, meaning you collect the toll from it, and that is what your revenue and profits are by building this particular road. And then ultimately after 20 years or 15 years, these are the long periods of agreements, you transfer this asset back to Indian government. And that model is called build, operate, transfer model. And in this model, as you will realize that the IRB infrastructure need a lot of money, and that is why IRB infrastructure has created two investment infrastructure trust. One is private, one is public. So the ability of a construction company to be able to operate in this model is dependent on how easily they can raise the capital. Now the third model is TOT, which is toll, operate and transfer. This is where, let's say, if there is already a highway that is already generating the toll revenues, what the government will say is, look, I need some money to build another road somewhere else. What I'm going to do is I am going to lease this particular road out. So they will invite for bids and say to construction companies that you come and start collecting the toll, which is the first part, toll. You operate it as well, which is the second part, and then you transfer it. In this case, what will happen is IRB will give upfront money or upfront capital to government, and then government will use that money to go and construct somewhere else. But essentially, IRB is going to make money by giving the capital upfront, but then collecting the toll for a number of years from that particular road and making some profits. And the fourth model you see here is HAM, which is the hybrid model. Again, I'm not going into details of this here because the video will get really longer here. And the reason I explained to you BOT and TOT model is because IRB infrastructure claims to have 30% plus market share in this particular segment. And if tomorrow government wants to build 100,000 kilometers of these roads, what are they going to do? They are going to need money for it. They are going to either tender them out on the BOT model, or they are going to lease some of their existing roads on the TOT model, or they are going to go for EPC model. They might use the mixed strategy here, but definitely they are going to need capital. And this is where the IRB infrastructure stocks comes into picture. I hope this hypercritical point is extremely clear to you in terms of what are the tailwinds for IRB. And if you like this point, hit the like button. Let me know in the comments. A simple thank you. With that, let me also present to you what is the revenue growth the company is expecting in FY25 and 26. They are saying we are looking at around 15% of revenue growth in FY25 and FY26. Lastly, is there any risk? From a valuation perspective, if you see, you will see that IRB is trading at 67 PE. It's an extremely high PE if you compare this with industry. And also from a PB perspective, almost 3 PB is what it is trading at. Industry is at 2.73. I've given you a lot of details, but I've given you the hypercritical points that the tailwinds that this particular stock enjoy. Do not take this as a stock recommendation. This is an information which is out there in the public domain. I've presented that to you in a systematic way for you to understand how the construction stocks really work. With that, let's move to stock number 3. The third stock that I want to speak about is IDFC First Bank Limited. Have a look at my screen and you will see that back in August 2023, the stock was trading at all-time high of around 99 rupees. Everybody was going gaga about this particular bank. How can this bank go from 100 rupees to 1000 rupees, 2000 rupees and so on? Now nobody is speaking about this stock because the stock has come down from around 99 rupees to almost 77 rupees at the time of recording this video. Almost 23% of fall within the 6 to 8 months of period. Then Rahul, why the hell you are speaking about this particular stock? See, the reason I am speaking about this particular stock is for two reasons. Reason number one is that if I show you very recently on 29th of June, there was a preferential issue wherein the mutual fund houses that you see or the investors that you see here have bought this stock at around 80.63 rupees per share. Again, the point that I will reiterate here is that when the markets are fearful, this is where the retail investors do not take bets. This is where the big investors take bet, because retail investors want to make money when the stock is rallying, which doesn't happen practically, right? Again, I'm not saying go and buy this stock. Please do not take this as a recommendation. I'm just teaching you the way how the markets move, how the investors move, and how they take different positions in the different time frames. And clearly you see here is 1 month back, they have got a preferential allotment at 80.63 rupees per share. What is the stock price right now? It is at around 76 level at the time of recording this video. Okay, Rahul, what is your second point? The second point that I want to talk about is I'm not going to speak about any numbers of this particular stock, because the stock is likely to get merged very soon with IDFC Limited, and all the KPIs are likely to massively change in my view. Therefore, there is no point in talking about these numbers. Maybe I'll create a video after a month or two whenever the record date of this particular stock is decided. As of 23rd of July, I have not seen any record date announcement for this particular stock. Therefore, the second key point that I want to speak about to you is the concept of arbitrage. I covered this concept in one of my previous videos where the Inox Wind merger was going on, but let me give you the example of IDFC First Bank so that you really understand this concept of arbitrage. So let me start by asking, what is the current price of IDFC First Bank Limited? You see on my screen 76.48 rupees. Can you buy this stock at lower price than this price? That is where the concept of arbitrage comes. So if I show you my workings here, you will see that on the record date, people who hold 100 shares of IDFC Limited are going to get 155 shares of IDFC First Bank Limited. This is the swap ratio or the merger ratio. Now today, the price of IDFC Limited is around 114.02. So what I've done is I've created this Excel sheet here, which is real time reflecting the prices. The price of IDFC Limited is right now 114 rupees. And if I go and buy 100 shares of IDFC Limited, my investment will be 11,410 rupees, right? On the record date, I will get 155 shares of IDFC First Bank Limited, as is the merger ratio. Now, if I multiply this 155 rupees to the current price of IDFC First Bank Limited, it is 76.47. My investment will become 11,853. That is 3.88% up, which is 443 rupees up, around 3.88% up from my investment. This 3.88% is called arbitrage. So what I've really done is I have not bought IDFC First Bank Limited. I have bought IDFC Limited, and I'll hold it until the record date so that I get 155 shares. And this has allowed me to buy IDFC First Bank indirectly at a price of 73.61 rather than 76.48. So that gives me an arbitrage of 3.74%, and this is where the people make money using arbitrage. Now I'm not going that you go and buy this stock, absolutely not. I'm just trying to teach you the concept of arbitrage using a practical example using the live prices. Now what may happen is that the price of IDFC First Bank might drop from 76 rupees to 70 rupees, 72 rupees at the time of record date. So that risk still holds that the price may go up or down. It might go up, right? So again, we don't know that. But as of now, if the record date was today, then I'll stand to gain 3.74%. So maybe look out for the announcement for the record date, and at that time, see how much of arbitrage you are getting to buy IDFC Limited, and you can take your decisions. Again, not a stock recommendation here. I have practically taught you the concept of arbitrage. And if you like that, hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. Also, subscribe to my YouTube member community if you want to really improve your investing. I post critical insights from stock market on a daily basis on my community. Give it a go for 1 month and you are going to learn a lot. With that, I'll see you in my next video. Until then, keep rocking.